In this video, we will solve a complete comprehensive example for the third method of adjustment of capital at the time of retirement of partner. The third method is where the total capital of the new firm is equal to the total capital before the retirement of partner. So let's go to the example sum. Example sum. Following is a balance sheet of Aruna, Karuna and Varuna as at 31st March 2019 who have agreed to share profits and losses in the proportion to their capitals. To the left of the screen we have the balance sheet given. On the right, additional information. On 31st March 2019, Aruna decided to retire from the firm and the remaining partners decided to carry on the business. It was agreed to revalue the assets and reassess the liabilities on the following basis. First point, land and building be appreciated by 30%. Second point, machinery be depreciated by 20%. Third point, there were bad debts of rupees 17,000. Fourth point, the claim on workman compensation was estimated at rupees 8,000. Fifth point, goodwill of the firm was valued at rupees 1,40,000 and Aruna's share of goodwill be adjusted against the capital accounts of the continuing partners Karuna and Varuna who have decided to share future profits in the ratio of 4:3 respectively. Sixth point, the capital of the new firm in total will be the same as before the retirement of Aruna and will be in the new profit sharing ratio of the continuing partners. Last point, amount due to Aruna be settled by paying rupees 50,000 in cash and balance by transferring to her loan account which will be paid later on. We are asked to prepare the revaluation account, partners' capital accounts and the balance sheet of the reconstituted firm. So as per the first sentence, Aruna, Karuna and Varuna have decided to share profits and losses in proportion to their capitals. So let's get the old profit sharing ratio between Aruna, Karuna and Varuna. The capitals are 2 lakh, 3 lakh and 2 lakh respectively. So the proportion will be 3:2. Aruna is the partner who retires. The point 6, which says capital of the new firm in total will be the same as before the retirement of Aruna and will be in the new profit sharing ratio of the continuing partners. So the capital of the new firm is equal to the capital which is prior to retirement of Aruna. So that's equal to rupees 7 lakh as per the balance sheet. And this has to be in the NPSR of Karuna and Varuna, which is given in the problem as 4:3. So this is a third method of adjustment of capital. We'll begin with the revaluation account, go on with the partner's capital account and then the balance sheet. Working notes we'll do after the balance sheet. So let's go ahead with this solution. Solution. Revaluation account. Left side debit side and right side credit side. We have particulars, rupees, particulars, rupees. As per the first point, land and building be appreciated by 30%. So by land and building account, %30 of rupees 2 lakh is 60,000 rupees. Second point, machinery be depreciated by 20%. So to machinery account, 20% of the value of machinery, which is 3 lakh, is 60,000 rupees. The third point, there were bad debts of rupees 17,000. So let's see the working notes for the treatment of bad debts. So working note 1 is treatment of bad debts equal to rupees 17,000. The first journal entry will be to write off the bad debts. Bad debts account debit to sundry debtors. Amount of bad debts written off 17,000 rupees. Narration being bad debts written off. Now for the next journal entry, we need to provide for the bad debts. There is an existing provision of rupees 10,000. We will utilize that, and for the balance we will debit the revaluation account. So we have provision for doubtful debts account debit 10,000 rupees. For the balance we will debit the revaluation account. Revaluation account debit 7,000 rupees to bad debts account, totally 17,000 rupees. Narration being bad debts provided for. So as far as the revaluation account is concerned, we need to debit the revaluation account with bad debts account for rupees 7,000. So let's post that in the revaluation account to bad debts account 7,000 rupees. The third point is done. The fourth point, claim on workman compensation was estimated at rupees 8,000. There's already a fund, workman compensation fund for 15,000. So we can take 8,000 from that for the claim and distribute the balance. The fifth point is about the goodwill of the firm. We'll ignore that for now. Sixth point is about the adjustment of capital. And the seventh point is about the settlement of Aruna's account. So all the entries are done. We will balance the revaluation account. The greater total is on the debit side, 67,000 rupees. So there's a loss on revaluation. By loss on revaluation, transferred to partners' capital accounts. We have Aruna, Karuna and Varuna. The total loss 7,000 rupees to be distributed in OPSR 2:3:2. So it's 2,000 rupees against Aruna, 3,000 rupees against Karuna and 2,000 rupees against Varuna. So this is a revaluation account. Let's go ahead with the partners' capital accounts. Partners' capital accounts. Left side debit side, right side credit side. Particulars Aruna, Karuna and Varuna. On the credit side again, particulars, Aruna, Karuna and Varuna. We'll begin by bringing down the balance of the capital accounts. By balance, brought down 2 lakh rupees in the case of Aruna, 3 lakh rupees in the case of Karuna and 2 lakh rupees in the case of Varuna. As per the revaluation account, there's a loss 2,000, 3,000 and 2,000. To revaluation account, ₹2,000, 3,000 rupees and 2,000 rupees. Let's read the reserves. There's a general reserve for 35,000 by general reserve account 35,000 rupees to be divided in 2:3:2. So we have 10,000 rupees, 15,000 rupees and 10,000 rupees. Workmen compensation fund by workmen compensation fund account. As per the fourth point, the claim on workmen compensation was estimated at 8,000. The fund is 15,000. So the amount to be distributed is 15,000 minus 8,000, which is 7,000 rupees. And this needs to be distributed in 2:3:2. So we have 2,000 rupees, 3,000 rupees and 2,000 rupees. Let's treat the goodwill as per point 5. The working note 2, treatment of goodwill. As per the problem, firm's goodwill is equal to rupees 1,40,000. Therefore, Aruna's goodwill is equal to 1,40,000 rupees multiplied by Aruna's share, which is 2 divided by 7, which is rupees 40,000. The old profit sharing ratio between Aruna, Karuna and Varuna is equal to 2:3:2. Aruna is a partner who retires. As per the sum, the new profit sharing ratio between Karuna and Varuna is equal to, in point 5, Karuna and Varuna have decided to share future profits in the ratio of 4:3 respectively. So the NPSR is 4:3. Let's find out the gain or sacrifice of the partners. Aruna sacrifices 2 divided by 7. Karuna, it's old share 3 by 7 minus new share 4 by 7, 1 by 7. It's a negative figure, so Karuna gains. And in the case of Varuna, old share 2 by 7 minus the new share 3 by 7, again a 1 by 7 gain. Varuna also gains. Hence the gaining ratio between Karuna and Varuna is equal to 1 by 7 is to 1 by 7, or in other words 1 is to 1. The journal entry, we'll debit the gaining partners, Karuna's capital account, debit, Varuna's capital account, debit, to Aruna capital account. Aruna's share of goodwill, it's rupees 40,000 here, to be divided in gaining ratio 1 is to 1. So 20,000 for Karuna and 20,000 for Varuna. Let's post this goodwill journal entry in the partners' capital accounts by Karuna capital account, under Aruna 20,000 rupees, by Varuna capital account, again under Aruna 20,000 rupees, and to Aruna capital account, $20,000 under Karuna and 20,000 against Varuna. The entries are done. We will close the account of the retiring partner Aruna. As per point 7, Aruna is to be settled by paying rupees 50,000 in cash. So we'll pay cash rupees 50,000. So to bank account 50,000, and the balance should be transferred to Aruna's loan account. So to Aruna's loan account, the greater total on the credit side, 2,52,000. The balancing figure transferred to Aruna's loan account is rupees 2 lakh. Let's do the adjustment of capitals. We'll take the partners' capital accounts to the top half of the screen. Working note 3, adjustments of capitals. Step 1 is to get the new capitals, that is the of the continuing partners Karuna and Varuna. The total capital of the new firm is the same as before retirement, and we know that was rupees 7 lakh as it was given in the balance sheet. So the new capital of Karuna is 7 lakh multiplied by 4 divided by 7, which is NPSR of Karuna. So this comes up to rupees 4 lakh. And in the case of Varuna, it's 7 lakh rupees multiplied by NPSR of Varuna, which is 3 divided by 7, which is rupees 3 lakh. Step 2 is to get the adjusted capitals. Of Karuna and Varuna. In the case of Karuna, credit side totals to 3,18,000 rupees minus 23,000 rupees debit side total. This is equal to 2,95,000 rupees. In the case of Varuna, the credit total is 2,12,000 rupees minus debit side total 22,000 rupees is rupees 1,90,000. The final step 3, we will compare adjusted capitals with the new capitals. In the case of Karuna, there is nothing mentioned in the problem as to whether the adjustments are to be made through cash or current accounts. We'll assume that it has to be made through bank assumption. Adjustments to be made in cash. As far as Karuna is concerned, the new capital is 4 lakh, whereas the adjusted capital is 2,95,000. So Karuna has to bring in cash of rupees 1,05,000. In the case of Varuna, the new capital is 3 lakh and the adjusted capital is 1,90,000. Varuna also has to bring in cash of rupees 1,10,000. So let's enter that in the partners' capital accounts by bank account. In the case of Karuna, it's 1,05,000 rupees. And in the case of Varuna, it's 1,10,000 rupees. We'll close by bringing down the balance carried down. That is the new capitals of Karuna and Varuna. It's 4 lakh in the case of Karuna and 3 lakh in the case of Varuna. Both sides tally, we know our arithmetic is correct. The total of credit side in the case of Karuna is 4,23,000 and the total of the debit side is also 4,23,000. In the case of Varuna, the total of the credit side is 3,22,000. The total of the debit side is also 3,22,000. So this is a partner's capital accounts. Next, let's go into the balance sheet. While preparing the partner's capital accounts, we made an assumption that the adjustments are to be made in cash, since there was nothing specified in the question. Balance sheet as at 1st April 2019. Liabilities on the left side, on the right side assets. We'll begin with the capital accounts. The continuing partners, Karuna and Varuna. The new capitals as per the capital accounts, 4 lakh and 3 lakh rupees. ₹4 lakh for Karuna and 3 lakh rupees in the case of Varuna, total 7 lakh rupees. The general reserve has been distributed. The workman compensation fund, we have a claim as per the fourth point. The claim on workman compensation was estimated at rupees 8,000. So we'll create a provision for the claim. Provision for workman compensation claim. 8,000 rupees. Sundry creditors. There is no change in the value. It's 50,000 rupees. We'll write down the loan account of the retiring partner, Aruna's loan account. As for the capital account, the amount transferred to Aruna's loan account was rupees 2 lakh. Let's continue with the asset side items. Land and building. Book value 2 lakh. We appreciated it by 60,000 rupees. So now it's 2 lakh 60,000. Machinery. Book value 3 lakh. We reduced it by 20% or 60,000 rupees. So now the current value is 2 lakh 40,000 rupees. Closing stock remains at 1 lakh. There is no change in value. Sundry debtors. Original figure 1 lakh 10,000. Less bad debts written off. As per point 3, 17,000 rupees was the bad debts written off. Outer column, the figure is 93,000 rupees. Cash at bank. The original figure is rupees 1 lakh. As per point 7, we paid rupees 50,000 to Aruna, and while making the adjustment of capitals, we found out that Karuna brings in rupees 1 lakh 5,000 and Varuna brings in 1 lakh 10,000. So it's plus 1 lakh 5,000 plus 1 lakh 10,000. So the final amount of cash two lakh 65,000. Let's check if the balance sheet tallies. Liability side totals to 9,58,000. Asset side also totals to 9,58,000. So this is the balance sheet. I'll remove the split. We can view the entire answer. We began with the revaluation account. Followed by the partner's capital accounts. And then the balance sheet. Working note 1 was the treatment for bad debts. Second working note was treatment of goodwill. And the third working note was for the adjustment of capitals.